Good morning, everyone, and welcome to the Golden Nugget. I'm Drew Wolfer, your golden guide to everything that's happening inside of the metals market. This is the Golden Nugget show that happens at 11:30 Eastern Standard Time every single Wednesday on not only the legendary Verified Investing YouTube channel, but my personal Drew Wolfer YouTube channel, the Verified Investing Twitter, and my personal Drew Wolfer Twitter. So whatever medium that you are watching this on, we appreciate you. Thank you so much for showing up. Now, to all the new people that might not necessarily know what exactly the Golden Nugget is or what's going to go on, first and foremost, we are going to gauge gold, which is us doing technical analysis on gold, talking about the trades that we had last week. A couple of them went very well, right? Then we are going to do the exact same thing on silver, where we do silver technical analysis. Then we're going to get into what is called the knowledge bank, or what I like to call the Golden Nugget, that happens every single week, where I drop a knowledge bomb on you from a training that I brought out with Verified Investing called the Golden Opportunity, that teaches you exactly how to trade inside of the financial markets, not only from a fundamental perspective, understanding economic dates and things of that sort and how they affect whatever market it is that you're in, but also from a technical perspective, because we know that technicals are technicals and they go across any market, asset, whatever you can chart. You will be able to use those things on everything that I teach you inside of the Golden Opportunity. So if that's something that interests you, the Knowledge Bank and the Golden Nugget is something that you might want to pay attention to, because it might incentivize you to get into that training and take your trading a little bit more seriously. Then we are going to do a commodity compass, which tells you everything that is happening inside of the gold markets and just the metals markets overarching in general, that is going to be moving the markets in the meantime, right? That way you can position yourself properly for your trades, right? And not just rely on me solely to give you the trades. Secondarily, we are also going to do two special segments, and then we are going to do the economic calendar, telling you everything that is going to be happening before you see me again next week, right? Faithfully at 11:30 Eastern Standard Time. So without further ado, we do have a star-studded cast. We've got the Fed. We've got Trump. Big Daddy Trump's in the building today. We have Citigroup. We have BRICS nations. We'll just say, for all intents and purposes, we have another star-studded cast. So without further ado, let's just get straight into the very first segment and let's gauge gold. So right over here, you're going to see this is our gold chart, okay? And for all intents and purposes, I brought up something that I don't normally have on the chart, and that is the FRVP. I do believe that this FRVP is, we'll just call it what it is. It is very critical to understand this right now. Why? This is the value area high right here, this top orange line. This is the value area low. This is the point of control. And this is actually why, excuse me one second, I gotta zoom in. Right here, this is exactly why we were going to take one of our trades last week. And let's pull those up really quickly. Bang, baby, bang. Okay, so if we were going to get a rejection, as you can see, this is the first trade that we were talking about taking last week. So I'm going to take some of these other ones off just so that you can see. Let's see, where's our first short? Okay, so this was our first short, and if you got into this trade, which most likely you did, it was on the break of this trend channel right here. And I can actually take this Fibonacci off of here just so you can see it. This is the upward sloping trend channel. And as you can see, it broke down, okay? So once it broke down and we came down here, this is where I was telling you, hey, no one is going to tell you not to take profits here last week, right? No one is going to tell you not to take profits here. If you do take profits here and then you break this low, then that's where you can start to think about getting back into your short and then riding it down here to these lows right over here. And we came within dollars of these lows over here. As you can see, we didn't hit the wicks, right? But we did smack into those candle bodies, swing failure pattern, boom, pumped up, regained that value area low. And as you can see, now we are pumping up. So most likely you are out of this short, okay? But what did we also tell you you could do? You could also add to that short once you got under this value area and then took out these lows right here. Because what we were thinking is if we were to swing fail here, right? Swing fail. These lows, which we did not, we would get into a long position. This obviously did not play out, so we couldn't take that trade. But guess which ones did? This one right here, okay, and then this one right here. We were talking about this local Fibonacci drawn from the bottom to the top of this nice little move up, okay, after we got out of this little consolidation range. Why was this crucial? Because it brought us outside of the value area high of this FRVP, right? So we took that fib and we said, look, if we come up here and we get back above this 0.618 at about 33.60, this is where you can start thinking about longs. And that is exactly what we did. We got it right here. We got it right here. Now, what you can do is stay obviously in this long and target these highs. But what I want everybody to understand, we need to stay above this 33.60 level as it sits right now. And for all intents and purposes, we really need to get up here, okay? And this is your long opportunity right here. So as you can see, this FRVP is going to extend out here. So once we get back above this value area high and we break it with volume, if we see like a move like this upwards, that is where this whole FRVP, we are going to take it off of our charts because it's going to be invalidated. But this is going to be your trade if we were to get up there, right? So we would say, okay, we break this parallel channel. We watch to see what happens at the top of this FRVP at the value area high. And then we are targeting about 3,450 bucks. We want to get right above these highs, and you could probably target 3,440 if you really wanted to. Now, what's the risk to reward on this? 6.5x to 10x risk to reward, because you're going to set your stop loss incredibly tight and you're going to trail it as soon as you get into profit. Okay. Now, if we were to fall from here, okay, because as you can see back here, we were talking about this last week, and this is why I was telling people, hey, don't be shy, take profits here, right? And then if it dumps again, add back to your position and take profits again, right? Why? Because the economic data was coming out for the jobs reports and absolutely smashed it. As you can see, big green God candle. So for that, I would like to see if we got a rejection here, we could then enter a short position, okay? So if you reject here at this top and even at the value area high, you would like to see a move down here to about the 200 moving average, which would give you about a 5x risk to reward. We're talking 33.86, 33.90 range. If you reject from there and the bottom end of this trend channel, that's where you're going to be thinking about shorting. But once you get above about 33.90 to 33.95, that's where you're going to be thinking about longs. Obviously, you're going to be watching this channel right here because we would like to get accepted back into this channel. And then this could turn into a massive swing trade that you could ride up to, potentially new all-time highs. Now, silver, same stuff, baby. Let's get into the silver snapshot. All right. So as you can see, we are reaching some resistance right here at about $38 down to about $37.70 at this previous consolidation zone after this big massive run up. Then we got the pullback. Then we got another big run up to obviously the 14-year high at about $39.50, right? So this consolidation zone right here, just under 38 bucks, that's where we're sitting as it sits right now. So if you pull a Fibonacci, as you can see from the high to the low on this swing, we are at the 0.5 fib right at $37.86. We are also under the point of control, which is right here. Now, I won't talk too terribly much about the Golden Nugget trades last week, because if you're still in this short from here, man, you absolutely killed it. But you should have gotten out of this short a long time ago. We advised to get out of this short a lot of times, but you did catch that short from the top. But in any case, our other long that we were talking about last week, it didn't play out because we did not get the swing failure pattern here. So it was no trade for us. So there was nothing we could do about that. Sometimes our trades hit, sometimes they don't. It just, it's the nature of the beast. So as it sits right now, I would be looking for a move above. Give me 1 second. Let me get this out of here. I would be looking for a move above the $37.90 to about $38 range. Now you need to watch out here at about $38.26, okay? So if you're looking for longs, this is what you're going to be looking for. If we pull this Fibonacci from the top to the bottom, okay, and we get this other fib off of here, we are still trading inside of this parallel channel, by the way. Massive, massive parallel channel, okay, as you can see. Now, if you're looking for longs, you're going to be looking for longs in this range right here, probably from about $37.27 to about $37.06. Why? Well, we don't really want to get down there, but if we did, you would like to see a bounce from the 0.382 fib and 0.5 fib and from this 100 moving average on the hourly chart, okay? So with all of that said, we need to stay above this 200 moving average right here at about $37.67. But for all intents and purposes, this is not like a guarantee of anything. But when you lose the 200 moving average, it's a pretty bearish sign for a move down. And if you lost that 200 moving average, you could short it down potentially here to about $36.86. And that 200 moving average right now is at about $37.65. So, I mean, it could be a pretty good move, about a 3x risk to reward. But what I would like to see is a back test of this 200. And then I would be looking to come up here and test the $38.63 range. So this would be your potential long. If you were to bounce from here, obviously you're doing it right now. I would set my stop loss extremely tight on this. And I mean like under this, where this fair value gap fill would be, which is right around here at about 37.60. So you could set your stop loss right here at about 37, call it just under 37.50. Your first take profit would be here at about $38.15. Second full take profit would be at about $38.68 to the top end of the value area high. And that is essentially what I am going to be seeing right now inside of the gold and obviously the silver markets. Now let's move our positions into the Golden Nugget trades section. That way we can make sure that we keep track of this into next week. Now, with that being said, I want to go through what is called the commodity compass. And if you have been here long enough, you understand what the commodity compass is. But for anybody that doesn't, it's just what's moving gold and metals right now. Okay. So what is going on inside of the markets? Well, we have gold prices slipping by 0.1%. to about 33, 70 something right now, as the US dollar actually is rebounding, okay? Futures were also declining, okay? Now, markets are awaiting Trump's announcements on Fed appointments, and that's something we're going to talk about in a special report coming here in just a little bit. There is going to be a temporary replacement, spoiler alert, for a potential opening, and future Fed chair decisions are something that Trump will be talking about very soon. So it is going to be a crazy, crazy week, or at least crazy month, most likely inside of August. So Fed Watch actually projects nearly an 88% chance of a Fed rate cut in September. So watch out for that. Because, and we're going to talk about that in that other segment too. So I'm not even going to spoil it. Okay, Citi has also lifted their 3-month price forecast to $3,500. It was previously $3,300. That's substantial. That's almost 5%, right? So we're talking, they moved it up from 33 to 3,500, and maybe it's 1/3%, something like that. Expecting a trading range of 3,300 to about 3,600. Okay, they're citing weakening U.S. growth, like GDP and things of that sort, economy growth, and also they're citing inflation, right? So we also have tariff tensions again with guess who? A BRICS nation. It's always a BRICS nation, man. If you don't know what the BRICS nations are, Brazil, Russia, India, China, South Africa, they are basically the gold guides, other than myself, right, in the world, okay? Now, I want to get into our knowledge bank, okay? And this is what I call the Golden Nugget, okay? And this is going to center solely around Fed rate decisions, okay? And I want, this is something that I teach inside of the Golden Opportunity, okay? There's more than one factor that goes into this. So I want to preface this entire section with that. It's not just, hey, if this happens, then gold goes up, or this happens, gold goes down, right? It's more than that, but for all intents and purposes, that is the overarching concept of this, okay? So why do central bank rotations and the Fed rate decisions kind of matter for gold, okay? So with Citi boosting its gold forecast, okay, and central banks likely to pivot to rate cuts soon, this week's golden rule is going to dive into how shifts in the US Fed and monetary policy is actually going to affect gold. Now, I want to jump into the charts really quick, okay, because essentially we're going to zoom out a little bit too, and we're going to take this stuff off of here, okay? Now let's zoom out, and I'm going to show you what exactly it is that I'm talking about. So in December of 2024, okay, we're talking December 18th of 2024. Let's zoom in. December 18th of 2024, which was right around here, right? This is where we got the Fed rate decision to actually cut interest rates, right here, okay? Look what happened after that, right? Let's zoom out. When in doubt, zoom out. Oh, wow. Right? And there's been, 5 decisions since then that were to hold rates steady, right? But look what happened. Nice little uptrend, right? So let's get back to where we were. And as you can see, the one that came before that, November 7th, they cut rates again. They cut by 0.25% here, and then they cut by 0.25% in November, and that was on November 7th, I believe, okay? So here is November 7th. Where's it at? I believe it's right here. Okay, so look at the nice little pump that we got November 7th. Bang, bang, 2.5%. Nice little uptick whenever they cut the rates. Now, did it go down afterwards? Absolutely, it did. And that's why I'm saying you can't just say, oh, rate cut, market go up, And the other one I want to show you, because they did 3 in a row, was September 18th, okay? So let's get back to September 18th. I believe it's right here. Yeah, so September 18th, okay? This right here. And as you can see, rate cut by 0.5%, market go up, right? And it just legged up, legged up, legged up. And then it started to trickle down. And then again, they cut rates again. It pumped again, came back down to previous support levels, which were right here, right? Previous support levels, right around $2,526, came right to it, bang, and then got caught and then bounced, okay? So for all intents and purposes, what I am telling you is whenever you see these policy decisions coming up, there's a lot that's going to happen. If you noticed, a couple of those times, I believe it was in December and November, right before the rate decision, you saw big red candles going down, right? Where people were trying to, basically trade the rumor. They sold the rumor, okay? And then it came out and they got the rate decision. It was just like, boom, right? Ripped it right back up. So sometimes it's best to stay out of the market for at least the 30 minutes or hour before that decision comes, and then the hour afterwards. That way, whenever it's whipsawing, you don't get shaken out of your positions and you let the market digest it. Because from a long-term perspective, from an understanding of the market perspective, there's better trades to be made than the absolute storm that happens after the news tells you, hey, we just cut rates. So remember that in September, if they do cut rates, like, I'm going to wait an hour afterwards and then catch the run that comes after that, right? Because there's plenty of gains to be made. As you can see, when we zoomed out on the charts, there were plenty of gains to be made after that. You do not have to jump in the second that they do it or position yourself beforehand, right? I promise you. Now, let's talk about our first special report. Then we'll get into our second one, the economic calendar, and then we will let you guys go on about your day. So this is called the Central Bank Watch. This is where it becomes very, very critical, okay? So the upcoming Fed leadership changes and potential interest rate cuts is what we're going to talk about in this. So the Federal Reserve governor resigned, okay? And Adriana Kugler, okay? A Biden administration appointee back in September of 2023. She actually resigned and she wants it to be effective in 2 days, August 8th, okay? And this was unexpected. This was an early resignation, by the way, from the Fed, okay? And she says she's planning to go back to academia in Georgetown University. She said, I want a simpler life. I'm tired. I want to go and teach instead of do this crazy, crazy high-paced job with a lot of scrutiny and a lot of eyes on me every single day of my life, right? So markets are going to be awaiting Trump's pick for the Fed governor that replaces Kugler. And a lot of people are seeing this as a very, very bullish sign, right? Because they're like, oh, wow, I don't want to get political. I don't get political. But what I'm saying is that a lot of people are like, hey, Trump needs to be appointing some Fed people because Biden was the last one that did that. And it's just not weighted, properly or whatever, even though Trump is the one that appointed, what's his name? The Fed chair, Powell, right? So combined with the Federal Reserve signaling, this, potential rate cut, and then Trump coming in and saying, hey, we're going to put a temporary person in until you guys can find your own, right? These appointments could actually shape that rate cut coming in September. Now, again, remember, I believe the last meeting was the first time in over 30 years that there was a split decision on rate cuts. There were two people that dissented in the ranks and said, hey, we want rate cuts. Normally, the Fed votes unanimously, right? But there were, two people this time that said, hey, I disagree, right? So that is very telling as to what could be potentially happening inside of the Fed itself, right? Like dissension in the ranks, right? So then, right, this piece is going to be critical in where gold goes from here. Again, as we know, you cut interest rates, gold goes up. You push interest rates up, gold usually goes down, okay? Now, Trump did say on Tuesday that he will announce a nominee this week. That was yesterday, right? For this upcoming vacancy, okay? But he also confirmed that the short list of potential successors to Powell, which is the chair, has actually been narrowed to 4 candidates now. So markets are anticipating 87% is the chance for a rate cut in September, okay? In other news, without talking about that, central banks bought 22 tons of gold in June. Even if retail is starting to say, you know what, we're okay going into the stock market and crypto and risk on assets as much, the banks aren't. India isn't. The central banks buying 22 tons of gold in June is crazy. They've bought 123 tons over just the first half of 2025. Central banks. That's crazy numbers. So take this into account whenever you're understanding gold is in a super bull cycle right now, okay? So let's talk about the last segment, which is tariff talks. Then we'll talk about the economic calendar and we'll let you get to your day. So tariffs on India are being threatened by Trump as it sits right now. He is tired of them buying their oil from, their fellow BRICS brother, right? Their BRICS sibling, we'll call it that, Russia. Okay, so what does this actually mean? He wants 25% reciprocal tariffs, and that was effective August 1. He put that on them, right? So this is on a wide range of Indian goods. So that, maybe your tiki masala spices and things like that, right? No, I'm just kidding. But it does include sectors like pharmaceuticals, machinery, pearls, minerals and fuels, broadly affecting about $66 billion worth of goods. That's pretty crazy. And pharmaceuticals alone take up 1/6 of that at 11 billion annually. So that's escalating, right? So he's also threatened to substantially increase tariffs from the existing 25%, targeting India because they are buying and, importing their oil from Russia. Now, there are potential secondary sanctions, and this is where it gets really wild, right? Because you're probably like, well, the 25% tariffs are already there, whatever, right? Well, broadly framed as what we would call secondary tariffs, or I guess what they would call secondary tariffs, Trump has threatened 100% tariffs on countries that are importing Russian oil of Moscow, right? And if Moscow refuses to pursue a ceasefire within 50 days, so he's upping that timeline. So he's tying these tariffs to Russia on their oil that they export due to, the conflict with the Ukraine. So could this, potentially shake out over the next 2 months and just be nullified? Yes, it absolutely could. But we've seen him put time clocks on these things before, and, sometimes it works and sometimes not so much. So let's talk about the economic calendar. But the one tidbit I do want to say is that in times of, global uncertainty, in times of tariff talks and threats of sanctions and, these massive 100% tariffs and, all these reciprocal tariffs where he's just smacking people, that's going to fuel safe haven demand. And what's your first safe haven? It's going to be gold. What's going to also follow that? Potentially silver, even though it is a production metal, right? It does have production to it, and it's obviously a lot cheaper. So they put it into a lot of industrial mechanisms, but for all intents and purposes, you will see a lot of safe haven demand flowing into gold and silver. Okay. Now, economic calendar until you see me again at 11:30 Eastern Standard Time next Wednesday for the Golden Nugget. Again, remember, I'm Drew Wolfer. I am your golden guide to everything that's happening inside of the metals markets. We have tomorrow, 8:30 a.m., productivity and costs. That is just the preliminary report. Don't get crazy over it. It's not super wild, right? Okay. 10 a.m. we have wholesale trade for June. Okay. 11 a.m. we have the survey of consumer expectations, and then we have the weekly economic index a half hour after that. That's all Eastern time. Okay. Now on Friday, nothing crazy. We have the market closing Friday evening and then opening, Sunday evening. So just pay attention, right? Pay attention. If you don't hold your trades over the weekend, close your trades tomorrow, or not tomorrow, Friday. Now on Monday, again, nothing crazy, but then on Tuesday, it is game time. CPI for July, and very likely this is the most market moving data of the week. I promise you. CPI is absolutely going to move the markets. Pay attention for it. Set it on your calendar. It drops at 8:30 Eastern time on Tuesday. That's August 12th. Okay. Then we have our weekly economic index on Wednesday, and obviously you will see me then. So you saw all of the reactions from all the economic data that dropped this past week, right? You saw your ISM, you saw your jobs data, you saw all these different things. Okay. So just make sure you pay attention for all of this stuff because it truly does matter. And with that being said, I appreciate you all so much. Make sure that you are positioning yourself properly. Make sure that if you want to learn how to trade, learn it from somebody that is a verified pro trader, somebody that can teach you in a way that actually makes sense, somebody that can teach you in a way that will, hopefully make you profitable like I am with an 80+% win rate that is documented inside of the Verified Investing YouTube channel, or inside of the Verified Investing community, not the YouTube channel. So I would love to have you inside of the Golden Opportunity. If that's something that interests you, click the first link in the description. I will see you next week. Bright and early, not super early, but, it depends on where you're based. If you're based on the West Coast, it is bright and early at 11:30 Eastern Standard Time for the Golden Nugget. And I appreciate you all so much for showing up. Have a wonderful day, everyone.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.